Hello, this is Matt on the Moon Lambeau channel. Well-respected crypto analytics firm Santiment has reported that traders of XRP are expecting price rise, along with other couple large cap cryptos. I'll be sharing with you a story from the Daily Hodl on that. Also, what people have been talking about quite a bit for most of the last 24 hours or so, maybe a little bit more than that, is what's the Federal Reserve in the United States going to do? What is the Federal Reserve going to do with interest rates? Well, that's going to be announced tomorrow. The Federal Open Market Committee, which is part of the Federal Reserve, they actually meet 8 times per year, so there's 8 opportunities for them to adjust interest rates. And there's concerns, and for some people, excitement, considering the potential outcomes of what goes there. So I want to speak a little bit on that as well. And then there's also this story from the Daily Hodl, and this is really fascinating. My friends, crypto ain't going away. Look at this headline from the Daily Hodl. Coinbase has its lowest balance of Bitcoin since bull market top of 2017, and that comes from analytics firm Glassnode. So I'll share with you the implications, but this is an indicator that the asset class is here to stay, so I'll explain why. But before going further, I do want to be clear, I do not have a financial background of any kind. I am not offering financial advice, and you definitely should not buy or sell anything because of anything that I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. By the way, within the last few hours or so, 3 to 4 hours, crypto prices briefly went bonkers. The price of Bitcoin rocketed upwards. Here, I'll just show you what it looked like. This is the 24-hour chart. You can see where I'm circling. It just rocketed up super duper quickly and then came back down to where it was just about as quickly. So it looks like that was just a fake out. Here's the same 24-hour chart, but for XRP. Less pronounced, but XRP followed Bitcoin just like you'd expect it to do. For a frame of reference, in case anyone's curious, it is currently 2:04 a.m. Because I record at weird times sometimes. 2:04 a.m. Wednesday, March 16th. And as I record this, XRP is sitting at 76 cents. Bitcoin's at $39,530, but it did run up over that bump right there that I showed you to $41,374. Market cap for the asset class, 1.77 trillion. And Bitcoin dominance at 42.23%. And here is the Crypto Fear and Greed Index at 24 out of 100, indicating that typical retail speculators are still experiencing extreme fear. Still silly. I'm just reporting it, folks. I know it don't make no damn sense, but that's how people are responding. Now, referencing this most recent bump from just a few hours ago, Credible Crypto shared the following. So he put out one tweet as Bitcoin had rocketed up, but had not gone all the way back down. Go back like just a little bit it had started to, but he tweeted out the following. You guys already know my higher time frame bias. Bullish AF. On lower time frame, however, this pump was nice, but we haven't cleared $42,500 yet, so thus far it's just noise. Let's see how price action develops here, but until we clear $42,500, this may just be a fake out and further chop on lower time frame. And wouldn't you know it? It certainly was. So he updated after that drop happened. He goes, update. It was a fake out. LOL. Yeah, it certainly was. None of this functionally matters, though. So, like, why am I just kind of smirking at these people that are extremely fearful investing right now? When you see the Crypto Fear and Greed Index at 24 out of 100, it's because you should expect the market to be behaving exactly with this level of volatility because it's been behaving like this for 13 years. So don't think it's going to stop just because you jump into the space. Nor should you want it to stop. Did you jump in crypto to make money to to increase the purchasing power of whatever you just invested in? To have it be worth more relative to the US dollar or whatever your fiat currency of choice is? Did you do it for that reason? Well, then you want volatility. Volatility is the purpose of investing, folks. So what's going on with the Fed, though? Because there's some big questions. I think this is going to be overblown. Like, some people are very fearful. The market's going to take if so-and-so happens. Or it's, if we get good news, which is all relative, mind you, then it's going to blast off tomorrow. And I'm just sitting like, well, okay, maybe. But even if it does, wouldn't be surprised if it's short-lived anyway. I just think the focus specifically on what the Fed is doing here, I think it's overblown. We've seen stories like this before, but still I wanted to kind of break this down and explain what it means for crypto. So here's a headline from Yahoo Finance titled FOMC Preview. The tightening begins this week. And again, FOMC, that's the Federal Open Market Committee, which is part of the Federal Reserve. On Wednesday, the Federal Reserve will likely take the first steps in paring back its stimulus by raising interest rates for the first time since the global pandemic began. High inflation makes it a near certainty that the central bank will move to tighten its policies of printing money by raising the target federal funds rate by 0.25%. And folks, you might be wondering, okay, especially if you're outside the United States, if you're wondering, why would the global crypto prices, why could it even potentially impact the price of Bitcoin on a global level? You're just talking about the United States. Yes, fine. We're talking about one country with 300 and whatever million citizens, and that's it out of roughly 8 billion humans, or whatever the number is now. I get it. Small percentage of humans. The United States dollar is the global reserve, my friends. So the implications are going to be far-reaching the world over. And then this piece continues as follows. The uncertainty for Fed policy lies in how aggressive the central bank will move after the first interest rate increase. Concerns are building that the Fed may not be able to credibly bring inflation back down to its 2% level. Prices rose by 7.9% on a year-over-year basis in February, a 40-year high. Yes, that's right. Basically 8% inflation on a year-over-year basis, a 40-year high. That's absolutely insane, but is anybody surprised based on the nature of the monetary policy and just printing the United States dollar into oblivion? And so what's important to understand here, inflation and interest rates are inversely correlated. So consider this. Like lower interest rates, and I should mention this too, just to be clear on how this works. So the Federal Reserve, and specifically it's the FOMC, that's the part of the Federal Reserve, that's the part that actually sets the monetary policy and interest rates. What they do is they set, it's technically a target interest rate. So it's what's cited here. It's the federal funds rate, but it's just a target rate, and then it's participants of the open market that are supposed to be somewhere in the wheelhouse of that. And so if participants within the space stray too far from the target interest rate, it actually is the case that the Federal Reserve, they can actually come in and just unilaterally intervene. And you might be like, well, how is it that they're able to just intervene? Like, what exactly are they doing? Well, banks actually, by law, are required to keep a certain percentage of their deposits with the Federal Reserve. So they can do whatever the hell they want. It's not just that they're setting a target rate. They literally hold a percentage of every bank's money. So there's that as well. Just consider that. But anyway, so think about this. If they're going to increase the interest rate to any degree, you know what that does, right? Well, think about this. Lower interest rates encourage consumers to borrow and spend more, which increases inflation as more dollars chase the same quantity of goods. It's simple supply and demand. More dollars, that's why, the United States printing more dollars chasing the same or fewer goods. That means inflation rockets. That's the reason, again, that we're seeing 8%. That in conjunction with historically low interest rates from the Fed, yup. That's exactly why you're seeing that. And so the government needs to stop printing so much damn money as far as I'm concerned. So there's a few moving parts to this, right? And so what does this mean for Bitcoin? Well, there's speculation. Some think that since Bitcoin's supposed to be this hedge against inflation, that it's good for Bitcoin if we keep having sloppy, terrible monetary policy. And in a general sense, I kind of believe that. I think over the long haul that could prove to bear out. It's a reasonable theory. But even so, what does the data show us to this point? The data shows us that Bitcoin and the crypto asset class, it's following equities. So look at what's happening in the stock market. That's where the greatest correlation is. We don't know for sure how Bitcoin and the crypto asset class is going to behave in circumstances where it hasn't even been tested before. So it's kind of an unknown. So even if you do have an increase, and say that it is just 25 basis points, which would be 0.25% here, even if that's the case, well, it's a marginal increase. So to start, like, is it going to have some sort of major impact? Not in terms of the way that the money's moving immediately. That won't be a big impact. It's more like the question that people are really asking in crypto is psychologically, what does that do to investors? I'm not convinced it does necessarily much of anything. Maybe. I don't know for sure. Like, things happen quickly. Things just happened really quickly a few hours ago. But it's not going to matter. What's more likely is if the Fed really wants to bump this up, they're going to do it in phases. So again, they meet 8 times per year, so they could bump it up 1.5% or 2% over a span of most of the remainder of this year if they want to, just bump it up incrementally. So, you're not exactly shocking the system. That, it's a calm, measured approach, so that might be reasonable. But in terms of what is it going to actually do to crypto prices, well, remains to be seen. But those are some of the angles that are being considered from what I've seen. It is what it is. I'm not expecting any sort of dramatic change in terms of the way people are treating crypto relative to what we've seen for most of the last 13 years. I'm just anticipating broader adoption. And so then there was this from the Daily Hodl. Crypto traders are bullish on Bitcoin, XRP, and Binance Coin. Santiment is detailing a breakdown of trader sentiment on specific large-cap crypto assets. The company's analysis shows that starting on approximately March 10th, traders began to see upside potential for Bitcoin, as well as the payments asset XRP and Binance Coin, which is the native token of the crypto exchange Binance and the core crypto asset of Binance Smart Chain. And then here's a quote from them. A comparison of crypto's top assets by market cap reveals Bitcoin, XRP, and Binance Coin are showing signs of traders expecting price rises. And especially with how much really, I'm not going to say just Bitcoin, with how much ranging we've seen in crypto markets, at some point, people are going to increasingly feel like the bottom's in. And you've seen Bitcoin ranging, between, say, 30 to 40,000 roughly for quite some period of time. Like, it's ranging long enough where it's like it's been ranging so long that the market must be broken. Something must happen. And so it's like, has anyone tried turning it off and then back on again? Because that would probably fix the problem. That's how it works with everything, especially technology related. All right, take a look at this headline from the Daily Hodl now. Another indication of very good things to come. So again, folks, you are here early. Way, way, way too early to the party. Seriously, check out what I'm talking about here. Coinbase has its lowest balance of Bitcoin since bull market top of 2017. I'm going to explain why this is a good thing. I'll just tell you right here, to sum it up before even going through the specifics here, which are highly fascinating. If Bitcoin is exiting top exchanges like Coinbase, that's an indication that people aren't really wanting to sell right now. Think about where the price of Bitcoin is now. And this is one thing to look at. Just be like, doesn't look like a whole lot of people are interested in selling. And it's not the end-all be-all. I'm not pretending that it is, but it's one thing you can look at. You can look at technical analysis, fundamental analysis, and on-chain analytics. There you go. It's one piece of the puzzle. Anyway, piece reads as follows. A leading blockchain analytics firm says that United States-based crypto exchange giant Coinbase currently holds fewer Bitcoin than it has in years. According to new data from Glassnode, Bitcoin held on Coinbase has dropped over 36% over the last 2 years. And here's a quote. Bitcoin held on Coinbase has declined by 375,000 Bitcoin. That's a 36.6% drop, by the way, since the all-time high set in April 2020. And that high was over 1 million Bitcoin in April of 2020. Now, of course, you can think what was happening then. Well, so the low point that we saw for Bitcoin for that era, that would have been in March as the pandemic was getting underway. But a lot of activity, potentially a lot more selling. I don't remember exactly where the price of Bitcoin was. I can hardly tell. Maybe it jumped up a bit since that happened. But there's already a lot more activity. So it looks like it was maybe in the $7,000 to $8,000 range, which is still way lower than what it is now. But a lot of uncertainty at that point also. Anyway, piece continues though. Here we go. Oh, they also wrote, this was driven lower by 31,000 Bitcoin last week after a large net outflow. Yes, indeed, even just last week. In fact, if you look where I'm circling right now, it looks like it's stair-stepping down. And what they're suspecting is causing the stair-stepping downwards because it looks strange. Like, why is it all jagged looking here? But then you get to the right, and it's just these stair-steps down. It looks like that's probably bigger institutional players moving their Bitcoin off of the platform because Coinbase does custody not just for your typical retail speculator, obviously. So that's what the analysis ends up concluding is that it's got to be institutional players moving their money, and that's what creates that stair step. So think about that. Institutions moving the money off of Coinbase specifically, not because Coinbase did anything wrong. That's not what we're saying here. They don't want to sell anytime soon, or else why would you move it off? Not that they can't move it on quickly, but they don't seem to have intentions. And Bitcoin price is still where it is. And yes, fine, it's volatile, but that's something, isn't it? Anyway, piece continues. In a blog post, Glassnode says that Coinbase experienced its largest net outflow of Bitcoin last week since July of 2017. The remaining Bitcoin balance currently on the exchange is also at its lowest level since the bull market top of 2017. The firm interprets the metric as a positive sign for Bitcoin adoption. And here's another quote. Coinbase in particular has seen a very large net outflow this week, totaling 31,130 Bitcoin, which is $1.18 billion worth, by the way. This is the largest net outflow since July 28th of 2017. The regime of net outflows, which are the red bars on that chart, following March 2020, is also quite apparent in the chart below. This remains a strong signal that investors increasingly see Bitcoin as a relevant asset in modern portfolios. Let me just pause there again to remind you, quite friendly here, that this is great. I want Bitcoin to do well, and you should too, because Bitcoin doing well, leading the market, and then understanding that XRP just moves in tandem, well, holy hell yeah. Because Bitcoin, and I've held Bitcoin since November 2017, I'm not as excited about it. It's already had a tremendous run up lately, obviously, going from $3,200 just a few years back up to almost $70,000 freaking dollars. But then you look at how XRP, despite the fact that it did run up to about $2 in April of last year, it hasn't had the crazy parabolic move that you've seen with some other coins. I mean, most haven't gone parabolic, most haven't. But that means that the opportunity is yet ahead. And knowing that the market moves in tandem, it's just a matter of time, unless you think that for some weird reason, this is the moment where XRP is actually going to decouple and be like the only crypto that doesn't go up. So if you're thinking that, like I would just do whatever you want. I'm not telling you to buy or sell or hold, but I'm questioning whether or not you're just being a fearful market participant. To anybody out there that actually thinks that's something that might happen, what data exists that would make you think that's reasonable? I don't think people are going to start parsing out the differences between coins sufficiently until at least the next bear market. And we're not there yet, folks. So I just don't have that fear. I just flatly do not. And I could be wrong. I don't pretend to know everything, but I feel rather strongly about that just based on how humans behave and historically what we've seen happen to this point. So it is what it is. I'm feeling really good and excited about all this, and I'm just going to be Mr. Patient here, and then eventually it's going to pay off in a truly life-changing way for well, better be myself, and also many other people as well. I think that those are the most patient are going to be the individuals that reap the greatest rewards. So there's a reason that I'm always following not just XRP, Bitcoin as well. Fine, this is an XRP-centric channel, but I talk about whatever crypto-related stuff I want to. Bitcoin's important here. It leads the market. I'm watching what's happening. And so even though I don't want to get in and out of positions because I'm not an idiot retail speculator, I still want to know what's happening. I still want to watch in case changes happen that are unexpected that would change my view. So I'm always going to stay in the know in terms of what's going on. But this is fantastic stuff here. At some point, there's going to be another leg up. I don't know when. But this market, which is an extreme fear, at some unknown point in the future, it will enter extreme greed yet again. I'm not a financial advisor. You should not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.